Good morning, Team Top Step. It is time for the market prep for Wednesday, July the 19th. My name is John Hoagland. Thanks for trusting me with your time. Getting a little feedback or slap back here. You're just going to turn this down. So, as always, this morning, our focus is going to be on seeking accurate context, which can be challenging. Always thinking about risk management, which is of ultimate importance, and remaining patient in our trading. Thanks again for joining me today, trusting me with your time. We have had a little bit of economic information coming in that came out this morning. It doesn't look like it was widely impactful, but we did have housing starts and permits, both of them coming out lower than expected. So, what that's going to do to the market, who knows? The market seems very pleased with the things that it's seeing and feeling and hearing about earnings and about the possible end of the Fed's tightening cycle. We know they're going to be increasing rates a week from today by probably 25 basis points, but a lot of speculation that this may be it for a while, and with a lot of hopeful traders and investors positioning themselves for that. Remember, it is 1 week from the FOMC meeting, so a lot of longer time frame traders will be hedging and adjusting inventories for that release. And investors and traders as well will be adjusting inventories or liquidating positions between now and next Wednesday. It is Wednesday, and we do know that 9:30 we have the EIA petroleum status report. The API came out with a minus 800,000 barrel drop yesterday. So um, crude oil is in rollover, which makes things a little bit difficult as far as volume and open interest is concerned. I guess the EIA last week, there was a 5.9 million barrel boost. They're looking for a draw of approximately 2.4 million barrels today. So if you're trading crude oil, just be aware at 9:30 Central, you may see some activity. So anyway, U.S. stock index futures held prices overnight on the rally. Held them pretty steady, as a matter of fact. Investors are enjoying the rally, fueled in part by positive earnings, in the sense, again, that the Fed cycle of tightening may be nearing the end, maybe after one more boost in rates, which is already probably priced into the markets. Next week, we are going to get that information. As far as earnings today, top earnings, Goldman Sachs misses on earnings per share, but beats on revenues. We have Elevance Health beating both, U.S. Bancorp beating both. So still, except for that little hiccup here in Goldman Sachs, we're still seeing some pretty positive earnings for the at least the larger banks. We've seen a little bit of difficulty with some of the smaller banks, which is to be expected. It's kind of what happened after the last banking crisis. So we know after the close, we've got a few biggies. We've got Tesla, we've got Netflix, we've got IBM, and a little bit longer list of earnings after the close today than we've seen so far this earnings season. So, what does that mean for our markets today? Well, with those big earnings at the end of the day, Tesla, just under $1 trillion market cap. That's a biggie, and a lot of folks will be kind of maybe starting to again prepare for that release, adjusting inventories. We had a pretty good up day yesterday. We're gonna look at that in the charts very shortly here, but looking at the VIX and the dollar index and the 10-year yield, very little change from yesterday. The VIX still 1335 dollar index, just over 100 at 100.2, and the yield on the 10-year at 3.74%, 3.77%. No major changes as far as that's concerned. And as always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. And we're going to be doing a lot of that. We're looking forward to bringing that to you. First one in the room today, the Rooster, crowing early, winning the prize. Good morning, Rooster. Scott saw and he conquered. Jimmy Decker, Duke, Tachyon. Good to see you back. Third day in a row. Caprice, the Earn, Invest, Repeat show. Yo, what's up? Good to see you this morning, Matthew. Good morning, JD. Will, I'm not aware of any changes that have occurred in only the NASDAQ. We'll have to take a look into that for you. Pete, Dan Trader, Shaw, John, Steven, Sarah Hall, good morning. It's good to see you back. We missed you yesterday. Prayers and love. Bill, Rusty Golfer, my spirit animal with us this morning. Futures trading today. Good morning, Robert, John. Orion, good to see you. Haven't seen you in a while. NASDAQ, Jared, Theo, good morning. Colby, George, good morning. And Lacey, the center of the universe, says good morning to you as well. JD is excited for another good day. I'm always excited before every trading day, no matter the outcome. I always view it as each day as a challenge. It's another opportunity to learn, grow, get better, and learn more about ourselves. Even more importantly, right? Jason, good morning. Brody, James, Michael, John, Josiah, good morning, my friend. Frederico, Steve, Anissa, good to see you. Fred Decker, good morning. It's good to see you, Fred. Haven't seen you in a little bit. Travis, David, Jeff, DeSobel, good morning. Denise, Trading Research, Collier, good morning. Nameless Trader, the Nameless Trader, good morning to you. Fred, had some slip back on his mic when he started. He has been working on his act as an Elvis impersonator and forgot to turn off the slap back echo. That's right. And there's something wrong with my lip. James Hagel matters. Why would they not raise rates this month? It just makes no sense to me. Yeah, they are certainly planning on it. It's been priced into the markets. I think the markets have priced in close to 100% probability of them raising rates by 25 basis points next week. Marcelo, good morning. Joe, good morning. Waiting for my pitch. Joe, you are so good and so patient, and it reminds us all to be patient that way. Good morning, JT. Bluebell sending good vibes. Very nice. Lacey says good morning as well. Alejandro, what time is it here? It is right now 7:55 Central Time, Chicago time. Tachyon. Ever see you every day now. Excellent, Tachyon. Great to hear that. It's always a pleasure to have you. I have traders coming back and spending time with us and saying good morning, and we really appreciate everybody. And our goal, as usual, is we're looking forward to your success. That's the most important thing for us. Jay, Phil, howdy. Good morning. All right. Well, we've got a little bit of business to take a look at here this morning. We're going to take a look at these markets now. We'll dive into the charts and see what we're looking at. Let me put my old people cheaters on here and we'll take a look. So this is the daily in the S&Ps. Obviously, the long time frame, medium time frame auction has been moving to the upside. It has come up, it has pulled back, come up, pulled back, and now it seems that it is in a potential um, kind of a continuation market state, I would say. The upside auction is continuing. The grade that I'm giving the auction currently is a B. We added 17,000 in open interest yesterday on higher volume. If you remember, this 4567 number was an important level because it's 5% off the all-time high. It's a level that a lot of traders put on their charts when there's pullbacks. You want to see how far the pullback goes. And sometimes on the way back up, these percentage levels can bring opportunity, which they did on Monday. We got within 5 ticks of that level before we pulled back yesterday. When we accepted above it, there was no reason to sell this market. So we had the market continue its push to the upside, and it's holding those levels now. So, the market is showing signs of continuation. It's showing signs of acceptance. And yesterday morning, what did I say? I said, when there's no bad news, the tilt to the equities is to the upside. When there's no bad news, The equities market, stocks just seem to drift to the upside, or as some would call it, they grind to the upside because the short time frame traders love the short side. They get short, and then the market runs them over. It happens over and over. It's been happening for 40 years. I call it that the S&Ps love to eat shorts. So we're going to be, thinking about the context. If there is no bad news, we don't have any talking feds. We're waiting for the FOMC. So if there's any kind of change in shorter time frame market state, I would look for the market to fall into some sort of range between now and Wednesday. But the market has been very chipper, and I don't see any reason that we're seeing a cessation or a slowing of the auction process to the upside. Take a look at the 30-minute chart. So here is settlement. Where are we? Well, we're basically right at settlement. We don't really have any overnight inventory with which to work with. Here's that level that we talked about. That's that 5% off the all-time high. Look what the market did was this Monday, traded to it and came off. Yet yesterday it traded to it, hung out a little bit, and then finally found buyers to push market higher, which left the value area low right at that level. It's amazing how visual these markets are. But what does that mean for us today? Well, much like yesterday, we're opening in range and in value. It may take some time for longer time frame traders to enter into the market. I'm going to be patient today. I don't have any overnight inventory to lean on. The market's in range and in value. Look, look at the look at the way this market kind of moved higher now. Focusing on the volume profile, we we kind of put some volume up above last week's high. We then drove higher, low volume node, put a little bit of volume right here at this level, drove higher, left a low volume node, another low volume node here that at one point became the next support level. The next support level. Where did we come back to by the end of the day? The nearest low volume node. These low volume nodes on directional days can provide opportunities in two ways. They can be supportive or resistant from the other direction, and they offer the opportunity to limit risk. When I look at a trade, the first thing I look at is where does the market prove me wrong? And what's the best trade location I can get if I can get it. This morning, stay patient. We're in range, we're in value. We had a big up move yesterday that performed well in the auction process. Maybe it's going to be a little bit of a hangover day. I don't know. Nobody knows for sure. We had a trend day, three distributions of time, several distributions of volume. The market can come back and test down to any of these levels before continuing its move to the upside. The most important nuances that I see in this profile, the excess low price was too cheap here. Sellers wouldn't sell it. Buyers took over and maintained control all day. One interesting thing about yesterday in the S&P is there was no real delta information to deal with. If there were longer traders here, they were longer time frame traders buying into this, and it looks like there were by the increase in open interest. They weren't using ICE orders. They were using something called growler orders. ICE orders just keep placing bids, placing bids, placing bids. You'll see Delta get more and more negative. Growler orders place bids. As soon as that bid is filled, they lift the offer for the same number of contracts. They can create an accumulation of in a position of tens and tens of thousands without affecting Delta. I hate it when they use that because that's one of my tools to see if they're present. And if they were indeed present yesterday, they were very sneaky about their activity. Yes, price moved higher, but they weren't tipping their hand, if you will, by using ICE orders. They were using growler orders. If you have questions about those types of orders, make sure that you join me today on during group coaching. I'm going to put the link into the chat right now because it's important to understand your competitors, and our competitors are mainly longer and medium time frame traders. We are pitting ourselves against or for them if we are there it is. We're pitting time frame against time frame. If the longer time frame traders were buyers yesterday, that means that the shorter time frame traders were probably shorting and getting run over and shorting and getting run over. You don't want to be one of the ones that is shorting and getting run over. You want to be on the side of the longer time frame that is exerting the pressure on the upside or the downside on certain days in the market. So if you want to learn more about the types of orders that longer time frame traders use to accumulate or liquidate large positions, come to group coaching today. That's at 12:30 Central Time. Bring your questions. We had a great session on Monday. Looking for another good session today. The NASDAQ. Well, the NASDAQ is kind of pushing up. Well, there's that 5% level. We saw that we broke out above it yesterday. We are now up against the weekly kickoff high in the NASDAQ. Weekly kickoff high, 16,010. The 16,000 big fat round number had a little bit of trouble holding on yesterday. It actually ended up closing below it. But if we can break out and maintain meaningful participation above the weekly kickoff high again, that's 1610, we may see this market continue this move to the upside. There's no reason to think it isn't. We added open interest yesterday, we added volume. The auction is presenting itself as relatively healthy. I'm giving it a B. It's doing pretty well. When I was in school, I think I got a B once. Was usually all A's. Take a look at the 30-minute chart. It's largely similar to the S&P's, the initial balance, low of the session. Um, no overnight inventory. If there is, it may be a little bit long. You see that the market opened here at 5 o'clock Central last night, and it's moved relatively steadily higher. So I think there is some anticipation in shorter time frame that we're going to break out, accept, and bring longer time frame buyers into this market to continue this upside auction. This is a really interesting and important level for us to open near today because why? It allows us to limit risk. Whichever side you choose, you can limit risk in and around these weekly kickoff levels. I put a link in yesterday that was written by somebody who is no relation to Top Step, but he watches uh, occasionally, sometimes a lot, the market prep. So he put this article um, in his LinkedIn, and I put it in the chat yesterday. I'm going to put it in there again today because I think it does a good job, maybe even better than me, on the importance of these weekly kickoff levels. Okay. All right. Let's take a look at the TPO chart. We know we're at an important level here. The triple distribution, trend day to the upside, excess low. The IB is the low of the day. Horsed around. Boy, the NASDAQ, it took forever for the NASDAQ to succumb to the upside that the S&Ps was exhibiting yesterday. Several distributions. There are weaknesses in this structure, but they're only going to be important if we get to them. If we do pull back, there's lots of different levels to look for opportunities to buy this market during weakness. There's maybe too many of them because you pick this one that doesn't work, you pick this one that doesn't work, you pick this one, and then finally that one works. By the time you find the one that works, sometimes you're done. Be patient. Make sure you're looking at good information. Trade to the Seek the best trade location you can first. If there's some structure that forms to the downside that lets you limit risk short of that, then you can think about doing it because again, it's all about limiting risk. Let's take a look at the crude oil market here. So it is in rollover. It's going to, I think, expire tomorrow or Friday, the August contract. Then we'll have a couple of weeks without that noise to take a better look at this market. Yesterday, you can see the volume is coming into the September contract. We moved to it yesterday, but there's still that what I call rollover blur. Crude oil is such a deep market. It trades 10 years into the future, and the open interest in it is difficult to read because of that. But volume, okay. Well, we know that they're still split between the two front months, which makes it more difficult to read. It's awaiting information from the EIA today. When we look at where we are price wise, well, we're inside last week's range, which is these purple lines. We're inside the weekly kickoff levels, which are relatively wide. I'm kind of expecting some volatility, but those were the only levels that made sense to me that we're going to push longer time frame traders into adjusting inventories. That said, looking into the shorter time frame 30-minute chart, we've opened with a gap. So the main nuance, other than the fact that we had a P-shaped profile, we lost open interest, 16,000. Now, a lot of that can be based on information from rollover, but it can also mean that this P-shaped profile, which is indicative of short covering, is being supported by the loss in open interest. So, if we lost a whole bunch of shorts, this area down here looks kind of uh, prime for revisit. Taking shorts out of the market actually takes buying power out of the market. We've opened with a gap, which is one of the main nuances we look at early in the session. We've traded to close the gap right away. So this gap close can be either supportive or if we re-accept inside value from yesterday, that may bring price back down to the low of value from yesterday. That's the value area special situation play. And you might want to, um, you might want to, if you have questions about it, you may want to come to group coaching and we can talk at length about all of that. No, Fred, triple distribution trend days is another indication, along with anomalies of buyers who are in a panic. In other words, not confident. You know, you're not overthinking. But like everything, Fred, everything is well subjective. Nothing happens the same way twice. And when you get the right answer, the market's going to change the question. And like Jim Dalton says, trading is as much about art as it is science. The art of the mind, right, Fred? All right, here's the TPO chart from crude oil moving right along. Here's our gap close. Support, possibly. Acceptance inside range from yesterday brings price to the low of value from yesterday. Could be an interesting trading day today because I believe because of rollover, we are in short time frame control. In other words, it's the short time frame traders pushing price around, not the longer time frame because we're in rollover. Take a look at gold now. Gold. So we have a reversal. We have a move. We have a bull flag. We have a bull flag breakout that happened yesterday on higher volume, but disappointing open interest. We lost open interest. In a move like this, I would be looking for money to be coming in to the long side, which didn't happen. Got an inside extended trading hour range today. This market may take a little bit of a rest today because it hasn't really brought in the interest that we think that it should on a breakout of this magnitude. There's our bull flag. We broke out overnight. We traded down to it in regular trading hours. Then we extended and put value above weekly kickoff high, 1972. Some good music from that year, 1972, and for those of you that remember, um, and, well, we're in range, we're in value, we're in regular trading hour range with no real overnight inventory, right in the middle of value. I have to stay patient. I don't see that there's a big change in the perception of an ounce of gold here, and the last thing I wanna do is trade at the perception of value. I wanna trade when it moves away from perceived perception of value or for either continuation or a move back to the collective perception of value of an ounce of gold. So here, I got nothing for you. Nothing. Maybe you move that back down to weekly kickoff high would be something I would be interested in, or a look at yesterday's high because why? Well, we have a excess low double distribution trend day to the upside with a small degree of excess on the upside. So price did get a little bit too cheap. It's not big excess, but the market did pull back before the close. Double distribution opening between the 2 points of control from each of these distributions of time and volume creates a probability that it is going to trade to both. So we've got the low of the day here, which is an anomaly, which is something that just doesn't fit, doesn't it sticks out, kind of an eyesore in the bell curve, and our point of control up here. What did we do last night? We traded to both. What did we do this morning? We opened inside last night's range. Big probability that we're gonna trade to both of these points of control today. So don't do anything here. Overnight low, overnight high would probably be the first levels that I would look for opportunity today in gold. Here's the 10-year. Um, so where we know rates are gonna go higher, we've come off this low. It's a decent reversal. If we can begin to have some meaningful participation and volume above weekly kickoff high, I don't see much of a reason why the market can't continue higher because this is the September contract and the rate hike is already in the market. If this is going to be assumed to be the last rate hike, you may see rates kind of stay stable or even pull back a little bit, which might put price higher. So it continues to test weekly kickoff high. This 113 level has been weekly kickoff high for the last 3 weeks, and it continues to be tested over the last 5 sessions. Low volume yesterday, well, not too bad, a little bit higher, but still considered low volume and an inert change in open interest, a loss of 5,300. Energy being sucked out of this market probably till Wednesday. Another test of weekly kickoff high today. What does it look like on the 30-minute chart? All righty. So excess high, poor low, overnight high, overnight low. In the middle, not doing anything. First place I would look for opportunities again would be overnight high, overnight low. This excess on the high of this is mostly just right above that weekly kickoff level of 1,300 of well, 113, I should say. So the last excursion above there was swiftly rejected. We just took another look up there. Is it rejected? Is this market gonna come down and test this poor low, this this prominent naked point of control down here? If we can't take out this high and a hold and build business up here, bring new business, a move back to the downside is likely. And I'm strictly speaking from the auction process, not as an economist, which most of them uh, don't know anything anyway. Look at the euro, really just kind of biding its time up here. The dollar right around 100 for the last few sessions. You gotta keep your eye on the dollar. So a little bit of volatility in this market last night as um, what was it? Great Britain CPI year over year came out a little lower than expected. It was 7.9%. It was forecasted at 8.2%. That came out right about here, and you see the volatility that it created, but did it change anything? Not necessarily, not really. We've got maybe a little bit of short overnight inventory that seems to be reconciled as we speak. We got VWAP right here, 112.56. Maybe opportunity there because it's value low from yesterday. We show acceptance of value. We may continue to rotate higher. We'll take a look at the PO chart and we'll let everybody get down to their business. So B-shaped, lowercase B-shaped profiles usually indicate long liquidation. Well, not today in the euro. We added 9,300 in open interest yesterday on an attempted push to the downside. We brought in sellers yesterday up against mm, no, that's not it. That's not it. Where to go? Up against last week's high. So instead of short, instead of long liquidation, we saw shorts come in yesterday, kind of forming that B shape yesterday. It's a little bit doesn't support long liquidation, and it's more of a long liquidation formation. So what happened? Maybe some long liquidation met short selling, and the short selling overdid the long liquidation. It's hard to tell. The excess up here above last week's high is formidable, and we've got relatively weak lows down here. So we've got a little bit of weak structure here in the form of a gap, naked points of control. If we can't continue, if we can't continue this move above last week's high, I would look for a little bit of a pullback. And then, of course, this is all about context, the auction process, and thinking about, of course, risk management. So that's what we've got for us for the charts this morning, and we've got a couple of uh, polls here. Where do you see the next 30 handles in the S&P going? 70% higher. Now that's 68 votes. Interesting. 70% now. Yeah, 70% higher, 68 votes. Good morning, my brother Rick. Good to see you. Was there another? No, that's it. That was the poll that I saw go up there. So, would you say that is a bullish number of people, or do you think that that's a little scary because more people that think it's going higher are positioned for it to go higher? Sometimes we end up getting too long to rally, and the opposite can happen. Fade the poll. There you go. All right, folks. Well, let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Looking forward to seeing everybody for group coaching today at 12:30. And until then, trade well. Have a great trading day, and we'll see you later on.